Hi friends, welcome to my YouTube channel SS Analysis. Finally, the OPEC comes out with moderate production hike with unanimous vote for after Saudi and Iran compromise. After a long marathon of dialogues and efforts to remove differences among members and non-OPEC members, OPEC finally announced its decision to raise production by around 1 million barrels per day from July. Suddenly, a tweet from the US President Donald Trump that he hopes that OPEC will increase output substantially need to keep price down within an hour after OPEC announced its decision. I would like to explain the impact of announcement of OPEC decision in a 4-hour chart. Here you can see that WTI crude oil futures were continuously coming downward since 22nd May, and you can see here that the WTI crude oil futures were on a downward voyage due to the unexpected raise due to the doubts over the OPEC ability to pursue Iran and Saudi Arabia on a single platform for raising crude production. So there were a plethora of doubts whether they will succeed in pursuing both the countries to come forward for an unanimous decision to raise oil production. So amid these hopes and doubts, WTI crude oil futures were continuously coming down during the last 1 month. So here you can see that on announcement of OPEC decision on 22nd June, WTI crude oil futures instantly take a steep upward move and finally closed at $69.28. But I find that WTI crude oil futures has a history of always been on a roller coaster ride whenever the OPEC meets, because the output boost agreed on Friday had been largely priced into the market and was seen as modest, which will be reflected in the movement of WTI crude oil futures during the upcoming week. So friends, I find that during the upcoming period, this modest output boost will no longer be affecting the crude oil prices from coming downward. So I find if the WTI crude oil futures move from this level towards the once again towards the level of $72 to 73, no doubt that we will find a lot of pressure in this zone, especially at the resistance of $73. The main problem, because Iran was left grumbling during this OPEC meeting with the US sanction, Iran has no means for this agreed hike due to the sanctions which were imposed in May. Iran, OPEC's third largest producer, which remained the main barrier to a deal, as it called on OPEC to reject pressure from US President Donald Trump to pump more oil, was finally pursued to sign the deal. Trump imposed fresh sanctions on Tehran in May, and market watchers expect Iran's output to drop by a third by the end of 2018. That means the country has little to gain from the deal to raise OPEC output, unlike top oil exporter Saudi Arabia. I find some excuses behind this production raise. First, falling productions in Venezuela and Libya, as well as the risk of lower output from Iran as a result of US sanctions, have increased market worries of a supply shortage. Another big uncertainty for oil is escalating dispute between the United States and its trading partners, which could hit US crude oil exports to China. So here we have to consider a lot of factors besides the uneven equation of demand and supply of crude oil futures while trying to analyze the movement of WTI crude oil futures. Now after the OPEC, we will have to look about the new development of currently going on trade war between the United States and China. Now the many other countries have come up import duties. So recently China has announced a retaliatory move by imposing a counter import duty on US products. If a 25% duty on US crude import is implemented by Beijing, American oil would become competitive in China, forcing it to seek buyer elsewhere. Chinese buyers are already starting to scale back orders with a drop in supply expected from September. If China imports duty dries up, more than 3 billion barrels per day of US crude oil have to find a new destination. The United States, which rivals Russia and Saudi Arabia for the position of world number 1 oil producer, has not participated in the current supply pact. The output boosted agreed on Friday had been largely priced into the market and was seen as modest. Now the movement of WTI crude oil future will be impacted by the current equation of demand and supply, which seems to be impacted by the current geopolitical moves from the oil producers and the oil consumers all over the world. I find that if the WTI crude oil future cross the level of $75, it hurts the global economy up to a greater extent. So no member country or non-OPEC countries want the oil to remain above $75 to save their own interests or to save their own economy. Therefore, I find a lot of selling pressure at these levels, and the oil is likely to remain under pressure. And now I find that a move of WTI crude oil futures to come down below the level of $65 will attract oil bears to create fresh shorts, and during the upcoming days WTI crude oil futures may come down up to the level of $62. Thank you for watching this video. If you like this video, please subscribe to my YouTube channel and share this video with your more and more friends.